Stephen Mead here with Domicile Real Estate. I have another Southern California housing market update. So just as a refresher, because a couple people have asked, our stats are based on Los Angeles and Orange counties in Southern California. I think it's important to actually sort of provide, a little bit of a fence on that. I think last week something that we talked about was this idea of sample size and data sets, and if you want information that's by the week, and we are doing weekly updates because I think things are changing very quickly. Because of that, it's important to have a wider area. So if you do have specific questions about sort of a more localized market in general, you can hit me up privately and I can work with you on that. I put in the headline that this is sort of our biggest sort of changes and news yet. And I totally mean that. It's not clickbait. I think when we started this, and when I say we started this, meaning pretty much right after the beginning of the stay-at-home order here in California, which was towards the middle to end of March, I think one of the things that we were all thinking about was we really didn't know exactly how our market was going to react to COVID-19, how it was going to react to some of the big economic pressures. And while we still can't exactly tell you what the future is going to bring, I think that's pretty reckless for somebody to sort of give that information out at this point. I think we do have a little bit of a track record, and we can talk about some interesting trends that we're seeing because we have learned a bit over these last 2 months. So without further ado, I'm going to jump right into the slides. Remember, folks, this is for the Southern California market, and our stats are based on Los Angeles and Orange counties. So our first bit of information here is new listings, right? And if you look on our graph here, right on the right side, you've got our key. We have pre-stay-at-home, post-stay-at-home order, and then the week of April 6th, 14th, 21st, 28th, and then moving into May, the week of May 5th, 12th, 19th. So basically, this most recent data here is over the last week, May 19th through May 26th. And, before I launch into the data, I think it is really important to understand something about this information. So if we go back and we think what happened right around May 19th that is important, and that is that the governor announced the idea of accelerated phase 2 openings. So remember, this was just last week. It was big news. It was a press conference on a Monday. And I think our question is, how does our market react to that? So these are new listings. So these are new listings coming on the market. And if you see a little bit higher than last week, still not a huge increase. For the over 1 million category, we were a little bit down. I would call these figures steady, right? Both of these represent a jump over 2 weeks ago, though. And I think that's sort of an interesting distinction to note. It seemed like we were kind of trading at a certain level, and then we popped up. Now, before I move on to sort of our new escrows, I do want to kind of recap something we talked about last week. That is, our multiple listing service, or the place that we enter in all of our listings, made a recent change at the beginning of May. And that was they announced something called a coming soon status. And that meant that a lot of agents started putting their listings into the system sooner than they otherwise would have. And it caused a bit of a spike. And I think I remember last week saying, I figured that spike would subside over time. And I think that's exactly what we're seeing this week. So it turns out that prediction was true. Now, if we're talking about new listings being sort of a measurement of the supply of our market here in Southern California, LA and Orange County, then the opposite of that is our demand, right? And the correlating demand is our number of new escrows. So again, this is my favorite statistic. The reason why this is favorite is because this is the result of a buyer and a seller who came to an agreement in the last 7 or 8 days. So meaning in the past week for our period, they negotiated. This is the most present data that you will find when it comes to market information. There's nothing that is more up to the minute accurate than this. And if I bring out our pointer here, we definitely have a real story sort of this week that's important. And, we watched pre-stay at home, right? Tons of new escrows. And then the market, the number of transactions fell by over a third, really. And I think that was totally expected. We all thought that was going to happen. And what's interesting, though, is that it started picking back up. And if we kind of draw a little bit of a trend line, I mean, we see that the last week just really in this under 1 million category jumped. I mean, this was nearly a 20% jump in new escrows. And I'm going to talk just for a second because I have a little bit of a theory on this and understand this is my theory. I've mentioned this a couple times before. I think right now our market is incredibly reactive to sort of confidence-based news. And let me give an example of confidence-based news, right? So last Monday, Governor Newsom here in California basically announced, I mean, really a sea change in policy on stay-at-home. A lot of counties would be able to go to accelerated phase 2 or phase 2B as they're calling it. Restaurants would reopen for dine-in service. Retail stores would allow people to have them inside. A whole lot of businesses would reopen. And I think what you're seeing is these new escrows are really sort of a barometer of how people are feeling about the short-term future. You know, do they think things are getting better, and how fast are they getting better? And this information from last week tells us people think they're really getting better and quickly. And we even saw that in our over $1 million category with a pretty significant bump. And what's interesting is this means our over 1 million category has almost recovered to its pre-stay-at-home order level. And I think that's really amazing. You know, at this point, I am comfortable calling this a trend. You know, we are seeing our market accelerate in terms of the number of transactions that are happening. And, you know, what's interesting is that these statistics, when we show this information on new escrows, I think something that's very important to say here is that these are a leading indicator of what sales will be like 30 to 45 days from now. So sales can be totally flat. That's the reason why I don't focus on sales. That information is old. It's 30 to 45 days old. We need information now to make decisions. If you are a buyer or seller thinking about doing something, you need what's happening this week, not what happened a month and a half ago. So I think we will see sort of these sales rebound a bit. You know, we're still trading well below kind of the levels that we would be for that under 1 million, you know, this time of year. So I do think it's important to sort of remember that, but we're also seeing a lot fewer new listings as well. And the way we try to track supply and demand in our Southern California, LA, Orange County market is we do it by something called absorption rate. And see, other way here, absorption rate. And sorry for this, our legend here doesn't fit through, but the absorption rate is pretty simple. We just look at everything that came back, everything that came new on the market, new listings, and then we look at the corresponding new escrows, things that went into escrow. So how fast are these properties coming onto the market? And then how fast are they going into escrow and kind of being off market and unavailable? And, you know, historically we see numbers, and I'll go over this in a second, I have a graph, but, you know, let me not bury the lead, right? This number jumped. If you are looking to measure how are supply and demand correlated, this is the graph, right? And this is probably our strongest indication of where we are. And guess what? Our absorption rate is better than it was pre-stay-at-home order. And, you know, it's been steadily rising, and we're seeing very healthy numbers. You know, usually if you are expecting a price reduction or price decreases in the short term, that absorption rate starts falling, right? Properties sit on the market longer. More properties are coming on the market. Not enough people are buying the ones that were already on the market, right? Like we kind of see a lot of indications, but guess what? That is not what's happening here. We are seeing a very strong supply-demand relationship. I think that if we go over here and we look at sort of our historic figures, this is normally where we would be in May. So if we were looking at the first week of the month back in 2019, you know, you can see once our market gets going, we sort of hang out in the 70s. That tends to be the way our market works, right? And there's a lot of reasons why this number isn't 100%. So if you guys are freaking out, absorption needs to be 100%, don't. Properties get pulled from the market, not every house sells, etc. But if we go back here and we look at where we are, guess what? We are almost at 80% right now. We have a very, very healthy market. in terms of that notion of our supply and demand kind of, balanced, right? And in fact, I would even say not only is our market healthy, I'm going to go over some stats here in a second that, maybe there's even some news. I'm willing to go a little farther than that in my positivity in terms of how the market is going. So let's look at our pending list price. And before I let you kind of look and stare at the numbers on that graph, I'm going to tell you why we measure pending list price. So our MLS system does not allow us to see what price a home is in escrow at until it closes. And the bad news with that is that means by the time you find out, it tells you what prices were a month to a month and a half ago, which right now I feel like is almost worthless information. Doesn't matter if you're a buyer or seller, that has no bearing really on what you're doing today, none. However, what we can do is we can look at what was the list price when a home went into escrow, and we can track that over time. So if that starts going up, it means prices are trending upward. And if that number is going down, it means prices are trending downward. So the absolute number isn't that important. It's relatively speaking what is happening week to week, which is why we track that information so we can see trends. So let me pull that up and I'm going to break this down for you. So this is again in our under $1 million price category for our Southern California housing market, Los Angeles and Orange counties. And we can see if we go over here in our pre-stay-at-home category, we were at roughly $612,000. Post stay-at-home, as expected, we saw a drop that basically was about 1.5%. Then we saw another 1% drop the next week. But then something started happening. It started moving in the other direction. Then we saw things jump up 1%, then 0.5%. They went back down 0.5%. Then they jumped through here, 1.5% again. They jumped a little bit last week, and they have gone ahead and jumped again. We are seeing very steady increases. So I think it is very important to note that these aren't huge, wild swings in pricing. So, we're talking, from the beginning of this at 612 to today at 619, that is roughly a 1% difference, right? Not a huge difference, but remember, think about where we are. We're a little over 2 months here in time. So this equates to, a 6 to 8% annual increase. So I think we're going to see that this year as a total. Maybe, maybe not. I think this summer is going to be very strong. I think we're going to have a very stable market price-wise. Now, I'm going to give you a really big caveat to that. I am very good at telling you the way things are. In fact, I think that is the point of these videos. It is to tell you what is happening right now. Anything else is really a guess. So we've got a trend of a very gentle increase in prices. There are a lot of things that could change that trend line, right? Bad COVID-19 news, that's a possibility, right? If our market is very sort of consumer confidence driven, a couple weeks of bad news like vaccine failures, rising infection rates and hospital rates go up, and there's talk of renewing lockdowns. These are all things that would have a negative effect on our market and on demand, right? The other thing too is talking about things that are maybe a little bit farther out there. And, some people have talked that sort of, maybe heard me mention this before, but my sort of back end fear, right, is that we have overcooked our economy and that it might actually recover a little bit too much of a V shape, and we might see inflation. And we've already seen this in the grocery sector, but I mean, there's a lot of reasons for that. And you might be thinking, well, inflation's not so bad. Well, it is bad because inflation usually leads to something else, and that is rising interest rates, which is not something that is generally good for our housing market. The low interest rates, we've grown accustomed to them. Buyers have grown accustomed to them. Sellers who want to move up have grown accustomed to them. So, my sort of like medium to longer term fear is that we may see inflation and some rising interest rates. Is that going to be like the next week or so? Probably not, but just something to think about. And then finally, we have one more graph this week, and that is sort of tracking our days on market. And, when we show this, right, one of the things that we're trying to do is we're trying to look at a bunch of different indicators about the housing market and see, are they all pointing in the same direction? So, we've had a very, very steady days on market throughout this. And, I think this is just pointing really to show that our market, our market doesn't move quite as fast as maybe we thought that it did, right? And if you look at this over time, there was kind of an initial drop in days on market, but we're generally hovering in the same range. I mean, this is not a big range on this graph. I think all of our market indicators point again to a very healthy, stable market. And at this point, I'm actually comfortable saying that we have a slight upward trend in pricing, and that maybe this year is going to look like possibly inflationary level home appreciation. So kind of 3 to 5%. I think a lot of people started this and they were expecting some sort of market crash. I would say that is very unlikely at this point. I think even if we saw some sort of bad news come on the horizon, I think we'd be looking at much smaller changes in pricing. And I think a big reason for that is fundamentally California is still very much in a housing shortage. COVID-19 has not drastically changed the number of housing units that we need. And because of that, we're not seeing that supply and demand relationship really altered that much. Yes, everybody's hunkering down a bit, but that applies to both sellers and buyers. So what I'm going to talk about this week is how to make decisions if you are a buyer or a seller in this market. So there are really three factors in making sort of a real estate related decision, right? So factor number one in that real estate related decision is, we'll call this macroeconomic effects, right? Like, what is the market doing? And when I say the market, I mean like the Southern California real estate market. So market with a capital M, right? What is that doing? Is there some knowledge? Well, right now our market is fairly stable. So I would say that is probably not a huge factor in your decision making, or it shouldn't be. The second thing is localized market. So a good example of localized market would be your particular neighborhood, right? So if you are a seller and you live in a neighborhood of tract homes, and this week there are no homes like yours on the market, and next week there are 5 homes like yours on the market, well, guess what? Your micro market, or little m, is indicating that maybe this week isn't the best week for you to put your house on the market. You should probably wait until some of those get snapped up, right? And then the third factor is personal factors. So this is, what's going on in your life? Did you just get a job promotion? How secure is your job? Are you expecting a child? Do you have family changes that change your living situation? All of these things that are very personal. So you kind of look at it as you're starting big, then you're going to medium, and then you're going personal and inward. And I think right now, the big market question is probably not a huge factor in your decision making. So, if you've wanted to buy a home, now is a great time to do so. If you don't feel comfortable buying a home because you're worried about your job, it's probably not a good time for you to buy, right? That the overall market is fairly stable and sort of non-effectual. The sort of little market, or like your neighborhood or local area or subsegment, like if you own a condo or oceanfront property, or whatever your situation, your particular situation is with your buyer seller, that probably is going to come into play a little bit. You want to be smart and make decisions based on that. And then finally, probably the biggest factor in your decision making is your personal factors, job security, family situation, all of those things. So right now, if you are in a buyer or a seller, that's really the place you should be focusing. I would urge you, if you think you're going to outtime the market and either get some killer deal or avoid some catastrophic loss, I don't see that as being a very likely outcome right now. I think you're kind of betting a lot on thinking the market's going to do something. And I don't think there's huge indications of large movements in the next 6 months. Anyhow, as always, thank you so much. Stephen Mead here with Domicile Real Estate, reporting on the Southern California housing market. If you have any questions or comments, you can always reach out to us individually. Post a comment below if you're on Facebook or on YouTube. Anyhow, we will see you next week.